Hello traders, welcome to another daily analysis for Monday, March 6th. I'm gonna also go over some weekly review in this video. Basically Monday, right now we are about 15 minutes going to a London session for Tuesday, March 7th. So March 6th Monday was very usual, quiet Monday. Don't really have anything only until Asian session, the previous one, which we just had the RBA rate decision and the statement. I will talk about that later. That's the only thing. Over the weekend, we do have the Australian retail sales, which came out as expected, a little bit better than the previous 2 months. Other than that, there's no significant news. There's a missile launch again by North Korea, but didn't really rattle the market too much. We might have a new travel ban from White House, but really, I think all the major data or catalysts was happening already last week. Last week, a notable thing was Friday, Janet Yellen saying that the March rate hike is very appropriate. Basically, the possibility for March rate hike is very, very high. And you might be surprised to see some US dollar drop off. People say it's because it's been priced in, things like that. But that's not, it depends on your trading style, of course, but for a swing trade perspective, you really just want to go with the central bank. And that was really my biggest lesson for this 2 months. Many of you know I had a lot of trade that actually got lost, and I was kind of puzzling at the beginning and realized that some of the trade or currency had a very strong fundamental data, but then realized that it's because the central bank has different positions. So if you have a currency that is very strong in the fundamental data, yet the central bank still holds a very dovish view, then most likely the central bank will play a much larger influence over that currency. So that means you can still buy that currency based on those data, but you want to buy at a much better level. So that was few of my mistakes in my previous losing trade, which I will go over later on. But let's just talk about the RBA first. The rate decision from Australian Reserve Bank of Australia was, of course, unchanged. There really wasn't no surprise. The statement was also no surprise, saying that they would like to see the currency rate to go a little bit lower, but you couldn't say it's overvalued because the high commodity price continue to support Australian. Other things that still can be better, since as the employment data, labor market, inflation, retail. But as for now, they don't see any reason for further rate cut or things like that. So a quite neutral statement. Generally speaking, is a neutral to a little bit hawkish, because comparing to their neighbor New Zealand, the Reserve Bank of Australia is much neutral or in a little bit hawkish. Of course, that's going to support Australian dollar further down the road. And let's get into each currency. For Euro dollar right now, as I mentioned, this is a new lesson for me. Now, as many of you know, I came from a technical perspective, so fundamental knowledge was still very new for me. I'm still always adjusting and learning for myself. And I think the biggest lesson, as I mentioned, is that the central bank really plays such an important role. I mean, it is always a very important role for central bank, but if you ask me whether a fundamental data is more important or the central bank's point of view, I will say it's a central bank point of view. However, the central bank needs to use fundamental data to adjust or to justify their policy. In the case of Euro, that's a very interesting thing, is because right now the inflation has hit the target of 2%. Right now, everything is picking up very well. However, the central bank still holds a very conflicted view, saying that they are not going to stop the QE, and they are also able to tolerate a little bit high inflation. This is the moment where a little bit confusion comes in, because people will say, okay, the fundamental data is good, so the euro should pick up. But the thing is the central bank does not think that way, or is not going to do that. And at the end of the day, central bank will have more influence. So this Thursday, we will have the ECB conference, the ECB rate decision. And this will be the time they have to basically explain how are they justify their decision to keep the QE? Now, of course, the market expect them to keep the rate, but the statement is a little bit uncertain because the inflation did become much better this year. However, most likely the ECB from the last meeting saying that they don't really think the inflation is stable enough. On the contrary, they think it's really from the energy price. So that's the thing, as I saying that if you have this kind of dovish statement from central bank, then really regardless of how good the data is. On the contrary, back then you have not so well data from Australia, yet you have a very hawkish central bank. And what happened is that the market will choose to follow whatever the central bank is decided to do. And if you think about it, it's because they are really the only entity that has a power to decide the value of the currency. So the fundamental data, no matter how good it is, it's just a tool for central bank to make their guidance. So that's something I realized, is that if you trade the fundamental data ahead of the central banks, sometimes you jump in the gun and you will get stopped out, and that was certainly what happened to me. So that's the new things I learned, is that always, don't try to predict what central bank is going to do. The safest way is really to follow central bank, not predict for the central bank. So for US dollar, of course, many of you know, central bank, Federal Reserve completely changed their position. Now everyone is very hawkish, and that's why you see a large buy into US dollar. On top of that, you also have the fundamental data to support this kind of hawkish statement. So because of that, US dollar really still remain a very strong currency, and we are still very faithful and hopeful in buying US dollar, especially with any dips. So especially if you are a swing trader, this is a very certain currency for this year. And if you look at all the major 8 currency, this is really the only central bank that has a high possibility to rate hike. Anything else is either holding the rate or cutting it. So that really says a lot about the future of that certain currency. British pound, back then we were neutral, and of course we don't have any catalyst nowadays, but I personally think this is sort of like a quietness before the storm. Why do I say the storm? Because the triggering of Article 50 is happening this month. So once that's happening, I think we will have a fresh new panic into the UK. And that's when people really realize, holy shit, we are out of Euro. We're out of Eurozone. So that uncertainty will at least cause a new fresh catalyst to the downside. That's what I think. So because of that, the sentiment is very negative. Back then, Bank of England does have a rate hike possibility, but right now the recent data is very negative. So the Bank of England really basically removed that kind of rate hike possibility. Therefore, it become kind of a neutral to dovish statement, a neutral to a bearish currency. Canadian dollar was what I got caught up in few of my pairs. So I got in back then very bullish about Canadian dollar because the GDP was well, labor market was great, and the employment data was also well. So all those was the reason for me to be confident in buying Canadian dollar. On top of that, the OPEC continued to be very bullish in the oil market. However, if you look at the chart, you will know that Canadian dollar had been largely sold off. Now, there's of course the reason because the strong US dollar pressured the oil market. But the biggest reason is because Bank of Canada is very dovish. It was dovish and is still dovish. And you have to look into detail. The reason they are being so dovish is because the NAFTA deal, it's because the trade with US. So although after the meeting between Donald Trump and Justin Trudeau, we know that Canada and US are still intend to have a nice mild relationship. However, the whole NAFTA deal still caused Central Bank of Canada to be very nervous. And that's why they keep saying the rate cut is still on the table. Now, because of that, that's why the Canadian dollar is very negative. And that was something I sort of overlooked because for me, I was thinking that the fundamental data were very good. The oil market is very strong. CAD must keep going up. And I was wrong because I sort of ignored the central bank. and however the central bank was actually the strongest driving force for the currency. So when you have this kind of conflict, the safest way is to do nothing. That doesn't mean the Canadian dollar will not go up. It sure will. But there's two options you can do. It's either do nothing, wait until the central bank to at least become neutral before you jump into buying it, or you want to buy it at a much, much better level. So you really want to buy at low. So I did not do either of it. I did not wait for the central bank and I'm jumping and buy it. And on top of that, I didn't buy at a nice level, right? I didn't buy low enough. I actually buy at the breakout. So I bought it at the breakout, and that's why I got stop out in a lot of my cat trade, which I'll show you later on. Australian dollar, again, right now the central bank is very neutral to hawkish, and you look at the fundamental data, it's still not that positive, but it's better than before, especially the GDP. So you can say that it's neutral fundamentally in terms of data, but because of central bank, it's very bullish, and the commodity price, the demand from China, and hopefully the demand from US, which if they really start doing the infrastructure, will need a lot of raw material from Australia. So that all plays some very nice element into the strong Aussie. So in that case, Australian dollar become basically the second strongest currency, just right after US dollar. New Zealand dollar was a same mistake I made as Canadian dollar. The fundamental data were very good. The overall market demand is very good. However, the central bank is very dovish. So you sort of have this kind of conflict. And that's where it's a new experience for me, of course. But if you have this conflict, definitely you should follow what the central bank is going to do. That's the safest way, is to wait for the central bank to at least become neutral before you buy the currency. Or you want to buy at a much lower level, which again, I will show you later on in my few trades. Japanese yen and Swiss franc, they both have no significant catalyst and really are fundamentally weak currency based on their data. And the central bank was still kind of dovish because both of them were still easing to help the economy, and they were still not going to stop until the inflation picks up, which the inflation in both countries are still very, very low, below the target. Because of that, they are both very bearish fundamentally. However, sentimentally, always remember they do have the benefit for safe haven currency. So that's why sometimes you will see a strong yen and strong Swiss franc. So that's pretty much what happened. And for later on the London session, we don't really have anything. Let me pull out the calendar for this week. So for this week, the important thing has already gone. The cash rate from Australia doesn't really provide too much movement. And you do have the trade balance from Canada. Now this one is tradable, but I will only look into short nowadays with the CAD data. As I mentioned, I do want to go with the central bank direction. You do have a better probability. New Zealand GDP price is important. It's not tradable for me because it's not scheduled and it doesn't have the expectation for me to trade the surprise. The Chinese trade balance is not tradable, but it's going to give Australian dollar a boost or a drag. Wednesday, you have a better thing. You have an annual budget release. Not really tradable for me, but it's a good data to look into a British pound. This is tradable for non-farm employment change. This is more like a prediction for non-farm payroll. So certainly you can trade a better data to buy US dollar. That's the only direction I will go. I'm not going to sell it. Crude oil inventory will play a fact for Canadian dollar. And then of course CPI will also be an element for the global market in general speaking. Right now China is so big that if they're not doing well, the whole market is not doing well either. So that's something you have to understand. And then finally Thursday we have the ECB mini rate and conference. Now mini rate is not tradable because it's gonna be zero for sure, most certainly. But the press conference is very important. This is where you can read and listen to the audio and look at the video to read through the lines, because that's where the Q&A comes in. Unemployment claim not really tradable unless you have something that's wildly really outside the deviation. Otherwise, not really something tradable. And then finally, Friday, you have manufacturing production from British pound. I'm also looking to short only when we have a negative deviation. And then non-farm payroll comes in at Friday. Now, this non-farm payroll is perhaps less important. The reason is because right now, pretty much the fundamental data had been ignored. The reason is because doesn't matter if you have a good data, people already know US dollar is most likely going to go up due to the rate hike. Now, on the contrary, if you have a negative data, that's not necessarily going to drop US dollar, right? Because you have a lot of deep buyer will come in to buy it. So unless you have a very, very negative data or very, very positive data, but it really depends on where the US dollar is for that day, depending on if you still have enough range to make money. So for intraday trade, I always look at daily pivot to decide whether its trade is worthwhile for me to take. Otherwise, if you buy at a high, that's just a general statement in any time frame, anything you do, just never ever buy at a high. Of course you can always do breakout, but based on my own experience, I really don't like to do breakout trade nowadays unless you have a very strong reason to do so, and unless that breakout is very, very significant. Otherwise, it's much safer to buy at low and sell at high. So that's pretty much what happened this week. And next week, of course, you do have the Fed FOMC meeting. And that's why I say this non-farm payroll perhaps will not be that important for this week. Okay, so let's take a look at what happened to some of my trade. Just give me 1 second. All right, so first thing first, my intraday trade, Cash Swiss, I got out break even basically. Back then I was saying that I was buying at deep and realized not really a good timing to buy. I was buying at here basically 75.53, and I missed this profit target. I was hoping to at least for it to reach 76.50. Never went there. Went a drawdown and then come up again, so I got out break even today, just done and dusty. The reason is getting to realize CAD is not a right currency to buy right now due to the dovish central bank. Other thing I have is Euro Aussie short. I got stopped out, unfortunately, this one at the 40. So I got in short at 39 when it went up, because I think it's 39 at 0. Of course, look at it drop again. Really not much comment about this one. I think the general direction for Euro Aussie should still look into the downside, but sometimes when you're doing intraday trade with lack of catalyst, the things that you just don't know how far it's gonna go. So looking back, maybe it's not really a trade I should have taken. The reason is because it did went higher, but it doesn't really go as high outside a daily pivot within a day, right? So for me, maybe that's already a bad sign. Nevertheless, that's pretty much two of my intraday trade right now. I'm flat for intraday trade. A lot of my swing trade got stopped out, and let me explain the reason. So first of all, my Aussie Swiss, this one I'm still in. Of course, I got in at a really bad level here, and basically I'm stuck in here for almost 2 weeks already. So I'm really looking to just get out break even right now. And the reason is because if you look at the line I draw, I just feel like this is not a right level, right? I don't really have any congruent area here. So for me, back then, again, I'm still trying to combine a technical strategy with my fundamentals. So sometimes a lot of things I said and done before are all still being amended. So that's why I say don't follow my trade blindly. Do your own stuff. I just provide some sort of different point of view for you. So please don't follow me just because I say something. Definitely I have more time to be wrong than right, and that's just don't follow me blindly, basically. So this I did not get in the right level, so I'm really looking to just get out break even. Aussie Yen, on the other hand, I got in at a pending order. I didn't get filled. 86, I like it because first of all, it's a wrong number. Second of all, I do have few price action to reject here. Notably is this kangaroo tail, this big bearish big shadow, and I also 50 exponential moving average right here. I have 25 exponential moving average right all this area, so it's riding pretty nice way above this 50 moving average since the beginning of the year, this year. So for me, this is a significant support. So 86, I still haven't got filled, but if I got filled, that will be my entry. My stop loss is way below at 84. Why? Is because I got 85 wrong number as a support, 86 as a support, 100 exponential moving average at a support, 84.50 weekly support. So for me, that's more than enough support. If I break all this support, something fundamentally is wrong. So that's why. Now, of course, I choose Aussie because right now, for a swing setup, the only two currency I'm looking to buy is Australian and US dollar. So everything else I'm not looking to buy unless I have a very, very nice technical level. Otherwise, I'm really just looking to buy Aussie and US. So those are the two trades. My cash sweeps got stop out, and again, it's to be honest, this is a great area right now. You're right at 200 exponential moving average. You're right at this 75.50. That's a weekly support, but and you do have this kind of kangaroo tail today. But for me, I want to be more congruent with my analysis. So right now, I don't really want to buy a currency that does not have at least have a neutral central bank. So I don't really need the central bank to be hawkish, but it has to be neutral. And right now, since Bank of Canada is so dovish in the past few meetings, I do want to stay out until they change their point of view. But in a technical point of view, of course, this is not a bad level, to be honest with you. You do have this nice rejection of here. You do have this nice 200-day moving average. So if you are fine with the risk, you could get in here looking to target in the next resistance zone. But for me, I am going to stay out. Cayenne was my previous pending order. I basically just got out. Same thing because I realized I don't. Although this is a nice support area, nice weekly support. You have this 100-day exponential moving average. You are right at 85 wrong number. Regardless, I don't want to buy it right now unless Bank of Canada can change their point of view. So I'm going to wait for anything updated. Now, of course, this way of trading, it requires a lot of patience. So that's why I do a lot of risk event trade for intraday trade, because I'm not really a patient person. But this is really good for people who just don't have time to monitor, don't have time to do day trade. And this is really a nice trade. You just follow the central bank, follow fundamental data, and really the requirement is for you to take a selective trade, selective pair at a selective zone with enough patience. So you will, of course, have a much better winning rate. So euro dollar is another thing we are in. Now this one I'm much confident regardless of this drawdown. It's reason because I'm more confident in US dollar. Backlink I got in at 0.550. Of course, you have multiple resistance above here. You have two moving average ahead of you to really cap this drawdown basically. So I'm still looking for a downside movement. Of course, perhaps 1.06 will be much better, but regardless, we're already in, so we'll see what happened here. So this is the trade I'm still in. All my dollar trade, I'm all still in. EuroCAD, I had a pending order before. I basically just deleted. I had one at 1.43, I think. Basically, again, for CAD, not looking to do anything about it for now unless I have a change in the central bank. Euro New Zealand, unfortunately, was a missed mistake because we got in at 50 at the pending order. Now, technically, of course, 50 is a wrong number. You got 100-day moving average here. Fundamentally speaking, New Zealand dollar, of course, data-wise, is doing much better than Euro, but you have the same dovish central bank as Euro, and that's why not really a good pair, and this was my trading mistake. So right now, 53 is still far away. However, we are really drawn down in half already. So I'm really looking for a get out at break even. Of course, hoping the ECB will be dovish this Thursday, then I'm able to get out. There's a few elements still on my side. First thing is the yield. The New Zealand dollar has a much higher yield, a much higher interest rate than euros. Of course, you naturally will have more investors to buy this currency, because if you're holding euro, you are not making any interest rate. So that's something play into my favor. You do have the commodity price playing into the fact, and you also have a much more dovish ECB than RBNZ, but it's not much differences. So not a good pair to getting in the first place. So if you're not in, congratulations, you shouldn't get in this pair. Cable is the one we're still in. I'm still holding it. I'm right at break even already. I'm still holding it again, just really looking another downside to 2-0, and I think it should happen this month, especially because of the triggering of Article 50. Pound USD we were in before. I also got out at break even. Now the reason is because I'm not that confident about New Zealand dollar because of the dovish central bank. New Zealand got stopped out, unfortunately. Of course, if you look at technically, you're great at 80 is a strong support, 100-day moving average. But again, regardless, sometimes if you have a dovish central bank, there's nothing really holding it. Dollar Swiss, we are still in this trade, still holding it. Dollar yen, the same thing. We are still in this trade and still holding it. So that's pretty much what we have. So right now, really only few trades in play. There's one we really want to get out is Euro New Zealand. Everything else we're still holding it. Aussie Swiss we also want to get out, but we are much confident to holding Australian dollar, of course. So let's take a look at our 28 pairs. I don't think we have anything today, but regardless, let's take a look at it. So first thing first, I'm going to jump into weekly first and tell you the pair that if you're doing weekly, those are things you can look for. So Aussie Swiss, honestly, if you are a weekly trader, weekly chart, this will be a pair I'm looking to long, which I don't have any good pair. Now back then you do have this nice kangaroo, a nice big shadow, right? Even right here, nice big shadow. But right now I wanna at least wait for it to touch 7.5. So 0.75 will be a good area to long for Aussie Swiss in a weekly perspective. You do have to watch out the 200-day moving average, but 7.5 will be good. You maybe put a stop loss way below 72.50. Now that sounds like a lot, but 250 pips is really nothing, to be honest with you, especially in a weekly perspective. So you put in 250 pips, of course you're aiming for 500 pips or even 1,000 pips, which again sounds like a lot, but in a yearly perspective, it's going to hit it. And once you hit it, you make 2 to 3% in one trade, and that's good enough. Consider if you're doing a weekly swing perspective. Euro dollar will be another thing looking to short, or suggest you to always look into short in a weekly perspective. Don't really have anything, and you are really at a very low level already. So back then, if you got in at this big shadow, it's still a nice trade to hold it. If you got in here, depending on where you get in, but your stop loss should above at least 1.09, just to be safe. And we're looking at one-on-one. Euro dollar, Euro Aussie also will be the one looking to short. Of course, you are at very low level already. So maybe wait for it to touch at least 1.4550 at a nice, you know, moving average and wrong number before you get in. Right now, I wouldn't short at this level, and cable will be the one also looking to short. Again, not a good level. Back then, 2750 will be a good level. Right now, especially in weekly perspective, you could still getting at 25, but in a weekly perspective, if you getting at 25, I pretty much will move my stop loss above 28, so 300 pips, and again target at 20 or even below. But in a weekly perspective, of course, the best level will be 2750. This is a much better area to sell high. Pound Aussie also is shortable right now. Again, too low. 70, 72 will be much better level back then. But again, be patient. Think about if you're doing a weekly, you really have to look at in a yearly perspective. So that's something you have to keep in mind. Like if you are doing a weekly chart, weekly trade, you have to judge your performance in a yearly base. Basically, whatever you do, judge your performance in a yearly base is the best way to have a more neutral point of view as a trader. Because if you're really looking at this up and down in a daily, weekly, or even monthly perspective, you will lose perspective, because you will have winning months, you will have losing months. But if you're in this game, serious enough, you know that you're trading this for years to come, right? You give yourself a couple years to run to become a nice trader, to become at least a profit, become break even first, then you become profitable. But give yourself at least 5 to 10 years. Really, this is a skill that worthwhile for you to invest time, expertise to be good at, because the income potential is exponential, right? It's not capped by anything. Really, if you get good at it, sky's the limit, basically. So really spend time to I always like to say that this is, you think about this is a industry that you are able to have the potential to make more money than a doctor's salary, and an average doctor takes 10 years, right? 10 years is for like a family doctor, right? So for you to think about just wanting to get good at in 1 or 2 years, it's just not really realistic, right? So for me, that's something I always put on back of my mind, saying that this is a game for a marathon, right? It's not for a sprint. So if you're doing weekly, daily, or even intraday trade, give yourself a yearly perspective. So don't be too quick to be defeated or to celebrate too quick. Basically, it's only March. Look at in 2017 as a yearly base, and even if you have a bad year, there's 2018, 2019 to come. So still hanging there and keep learning. That's basically what I tell myself all the time. So Pound Aussie will be the only thing that I'm looking at right now. Again, I'm only looking to buy US dollar or US or Australian dollar. Of course, things might change, so that's why we do this kind of weekly update, because central bank can change their position. The good thing is that central bank is not going to change their position overnight, so that's something to keep in mind. Dollar Swiss be something other thing I'm looking at. Obviously, don't really have a good level right now. I think 1-0, if you want to do, you could put a pending order at 1-0. This is one. It's a very significant area, so you could put at 1. And stop loss really depend on your own choice. But if I were you, look at historically, right? You still have a lot of room to go upstairs. So if I were you, maybe put a previous swing low at below 0.9850. Could be nice. You want to put 9750, it's good enough too. So dollar Swiss is something you're looking to long. Dollar yen also looking to long. You do have this nice big shadow today. So if I were you, maybe 11250 or 113, depend on your own risk tolerance. But doesn't matter what you do, it's best to put your stop loss at 110, just to prevent, because you do have this kind of tails right here. So If you put at 111.25, you might get stop out in terms of whipsaw. So it's really, you put at 110, you are below 2 moving average, 2 resistance area. Sorry, 2 support area. So it's just much safer. If you get stop out at 110, it's going to the downside. So that's more like a point of no return, basically showing that you're wrong. So 110 would be nice. You could get at 112.50. Again, all this trade, don't get scared by this kind of large stop loss. This is a weekly chart. So for things to go like, back then, 2016, it went up almost 1,000 pips, right? It's nothing to win 1,000 pips. So for it to go up those, that kind of pips, it's nothing. So really, it's going to hit your stop loss or your target. So dollar yen is something good to loan. Dollar CAD is also good to loan, but again, we are not at a good level. You do have a nice big shadow, but if you buy right now, you're really buying at high. So really, I will looking at 1.30. We might not get there soon, but that's a much better level to get in. And I think 1.35 or even 1.3625 will be a significant resistance for dollar CAD. Finally, did I go over Aussie, New Zealand? Maybe not. Not yet. So Aussie, Swiss, I already win this one. Aussie dollar is something I'm not going to do because they both are quite strong. Aussie CAD, you could also loan. Again, maybe don't have a nice level right now. If you want to ask me the immediate level, I will say, 1.0 is good. 1.0 is good to loan. Stop loss 9.8. Sorry, 0.98. 200 pips. Again, you're aiming for a high. And Aussie, New Zealand, keep going up. So this is something we actually went short before, which was a mistake. Right now you have a busty kangaroo tail. It does look like it's gonna keep going up to at least take. So right now, of course, it's too late to get in because you are going to hit 1.10, which will be a strong resistance. So maybe a little bit patient. Let's wait to see if it's going to retouch 1.05 again. And finally, Aussie yen is the one we are in a daily perspective at 86. Now, if in a weekly perspective, maybe 85 will be a much better area. But 86, you do have a 200-day moving average. So in a weekly perspective, you could put at 86 or even 86.50, which is now. But your stop loss should definitely below this swing low, which is below 83.50. So if you want to do 86.50, put about 300 pips stop loss. Again, don't get scared by this kind of stop loss. It's nothing because it's a weekly perspective, and it's a swing perspective. So finally, New Zealand dollar. So New Zealand dollar is a huge drop back then, and if you look at weekly perspective, no surprise, you're hitting this strong 200-day moving average, and that's why it reacts very well here, here, and here. So right now, of course, too low to sell, but if it retouches this 200-day moving average again at maybe 73, that might not be a bad level to short. And all this, of course, counts down is because of the dovish RBNZ. So back then, all this green candle was due to a neutral RBNZ with a positive fundamental data. So people were expecting the Central Bank of New Zealand to change their perspective from neutral to hawkish. Not only that did not happen, they changed their perspective from neutral to dovish. So that's why you have this huge drop. So that's why I say central bank is very important to keep in mind. Okay, so that's pretty much for the weekly perspective. Daily, there's exactly same thing. I'm only looking to buy dollar or buy Aussie, but I'm still gonna go over 28 pairs. So if you look at Euro Pound, obviously, it's keep going higher, and there's no surprise. It's because British Pound really this month, I don't know anybody who will really buy British Pound this month. It's just so risky, especially ahead of triggering this Article 50. Any news can come up to drag it down, right? It's very little news can push it up, unless suddenly Euro says, oh, we decide to give you single access no matter what. It's really not gonna happen. So I do expect this March to be a very negative month for British pound, and that's why you keep seeing the Euro pound keep going up. Now Euro Swiss also went up. Now a little bit side story about Euro is there's two elements to push Euro up. First thing is that the 2% inflation target had been hit, and that's why again a lot of people were trying to predict central bank's movement. So they were thinking that because it's been hit, so the central bank right now has to talk about tapering of QE. They have to talk about stop the QE. As I mentioned, back then that's what I did, but now I don't like to predict the central bank movement because it's just like a guessing game. So it's much safer to wait for the central bank to give you their answer instead of you trying to guess their next movement. But basically that's what happened. That's why you see a lot of Euro versus other weak currency went up. Also, French election. Back then we do have I don't know which candidate, but a central candidate or something to come up, and we have a new investigation into Le Pen. She apparently has some trouble over fake jobs or something, I don't know. But anyway, that's a dramatic element, sentimental element to give Euro a push. So that's why you saw a lot of Euro strengths, even Euro dollar, you do see this kind of movement last Friday. So that's just a backstory, but it's not certain. It's just highly sentimental. For me, the only thing will change Euro is from the Thursday central bank of European Central Bank. That will be a certainty. But regardless of when they are versus Euro versus dollar or Aussie, I'm still favored to the short side. Euro Aussie, as I mentioned, unfortunately, we got stopped out back then at 38. If you're looking back, not really a good level to get in the first place, right? So right now, if you're looking at the weekly perspective, this is a low already. So for me, again, 40.26, it's not bad to get in, but I need some sort of candlestick rejection before I get in, because right now I have this pulse movement and that's it. So I do want to see at least something like this kind of, it does look like a kangaroo tail. Maybe it's not really a kangaroo tail, but doesn't matter. For me, this is good enough. Something like this, you penetrate it, you fail. All these are sort of like a rejection movement to confirm this resistance. Right now, we don't really have it yet. This is today, we only have this dodgy movement, so it could very easy to keep going higher. So I don't want to jump in the gun right now. EuroCAD, not something I'm looking to do anything about it, just to let you know right now. But you do have this nice kangaroo tail signal right here. But again, I'm right now for swing trade only looking to do currency that has a very strong correlation. Very strong differences. Euro USD, unfortunately, a mistake trade we got in. Now, many of you might ask, why don't I just get out now? The reason is because I still think it should touch 50 again. So I'm basically baiting it. Certainly not a good reason to stay in. But for me, really, because the stop loss still has 100 pips or so. We'll see what happened to the Thursday ECB meeting, but I'm really hoping for it to retouch 50 again for me to get out. Euro Yen, same thing, not something I'm looking to touch. Pound Swiss, not something I'm looking to touch. Cable looking to short, which we're already in. Pound Aussie also looking to short, but we are too low right now, so I don't have a good risk reward ratio to get in right now. And so we will see what happened later on, what happened here. If we can have another push up to 62.50. Let's keep going. But really, 62.50 is not even a good level to get in for me. Really, it's kind of still too low, right? Really, 65 will be perfect, or even 67.5. But for us to get in there, it's pretty much not gonna happen in the meantime. So we should expect it to touch this support zone. Pound CAD also not something I'm looking to do, but 65 should be a strong resistance. Same as Pound NZD and Pound Yen. Swiss franc, Japanese yen, also not something I'm looking to trade. Dollar Swiss, I am looking to long, I'm already in. Same as dollar yen, looking to long, I'm already in. And dollar CAD, I'm also looking to long, but really want for it to at least drop to a much better level, maybe 32 or 32.50. And let's take a look at Aussie Swiss, again the one I'm already in, looking to get out at break even. Aussie dollar, not looking to do anything about it. It's really just in the range because they both are quite strong. Aussie CAD, looking to long, not in a good level right now. And Aussie NZD, huge upside movement. Look at that. It's really going to touch 1.1, I think. And Aussie yen, also looking to long. I do have a pending order at 86 right now. CAD Swiss, not something I'm looking to long, but it is at a good level, I have to admit it. So if you are fine. Now CAD Swiss, of course, fundamentally, you do have a better data from Canada for sure. You do have a higher yield. You do have a better economy right now. But because the central bank is for CAD is even more dovish than Swiss franc, so right now I'm trying to stay out. Same as CAD yen, same as NZD, not really looking to do anything about it. I do have to admit it, everything is in a very nice low level, but that doesn't mean you will buy it. You know, you don't want to just buy because it's falling down, because you never know how high it can go, you never know how low it can go. So basically that's what I'm looking at right now, guys. And getting a lot of new learning for myself. As I say, this is a new style of trading for me also. So again, hope you learned something from it. If you have any question, feel free to ask me. I'll be more than happy to share my knowledge. Other than that, I'll be back tomorrow with another daily analysis. Okay, thanks for watching. Thanks guys. Bye bye.